Well, I told you that we were going to have a rally going to the year end right before the crash. I promised you a rally, and we sure have one. It's not unusual because going into the last part of the year, the last quarter, it's always strong. Why? Well, because professional traders, first of all, they cover all their short positions because they don't want to get caught where they're in the middle of the Christmas rally and they don't want to get caught in all the fudging of numbers. The CEOs play all kinds of games at the end of the year with inventories, billing. They'll take a bill that they owe $1 million and they'll shove it off into next year. They'll play games with their inventory, anything to get their bonuses up. So that's what creates such a strong quarter, is all the game playing for bonuses. So that's what you're witnessing. So it wasn't that hard to call this rally. And I said we're going to have one big rally before we get into the crisis, into the crash. But people are now thinking, well, there's not going to be a crash. And especially with Black Friday, Jared Bernstein, the head economic guy at the White House for the president, comes out and says, oh my God, look at the shopping. People are spending money. It shows that Bidenomics is working. The consumer is strong. The labor market is strong. And by the way, you ever notice they've been using the labor market, the strong labor market, which it isn't, but they've been using the strong labor market to mask everything that's wrong. From the worst banking crisis we've ever had, debt and deficit crisis, breadth crisis, valuation crisis, extreme low volume crisis, inverted yield crisis. They use that, how strong the labor market is, to mask all of that. So he comes out and he says, look at, we went, the sales this year were up 42% over last year, around 940 billion. This is good. Consumers are strong. They have money. This proves it. No, it doesn't. The reason the sales were up 42%, about 940, 950 billion, because the consumer's broke. That's right, he's broke. He withdrew his money from his equity in his home. His savings is gone. His emergency 401k is gone. And if you look at the auto and you look at the Master or credit card delinquencies, okay, we haven't seen them this bad in over 15 years. So the retail, big box stores and the rest of the retail industry came to their rescue. I said, how about we do this for you because you're broke? Tap. You can buy now and you can make a decision to pay either 30 days, 60 days, or 90 days. And you don't have to pay any interest. That's what happened. They're putting them into even more debt. The consumer has historic debt. The country has historic debt. And the retail industry comes out and says, well, we'll step in and we're going to save them because their credit card's tapped out. This is insane. And that's what happened. So no, it's just the opposite of what Bernstein is saying from the White House. No, it means they're very, very, very weak and in deep trouble. But also, let's talk about the market itself, the breadth in the market. I mean, we have 8,000 stocks that are trading on a daily basis. Do you know only 6% of the 8,000 are hitting new highs? That's it, 6%. We're hitting on a daily basis more new lows than highs. That's terrible. And the big institutions aren't participating in this market. They're sitting on the sidelines because they're not going to sit there and pay for a stock. The PE ratios are insane. They're not going to pay. They're not going to sit back and invest in a stock, a tech stock, and wait to get their money back after, let's say, 30 years. I mean, some of these tech stocks are 30% above their historic average. 40%, 50%. Crazy. They're not going to invest in these stocks. Well, who's investing? Who's buying these stocks? The same tourist investor. He doesn't know what the hell he's doing. They all think, well, if I buy Microsoft, I'm going to be rich. This is the exact thing that happened, if you recall, in 2021. I warned about that then, that we had the same exact problem. We had these terrible PE ratios. They were crazy. And look what happened. People lost 50 to 60% of their money. And as I said, the consumer's in trouble. And let's talk about the whole economy. Oil. That's right. I'm right about this crash. Oil. I don't care what Saudis do. I don't care what Russia does. They can try to play all the games they want to try to cut production, get oil prices up. It's not working. They're not bigger than the market. The global economy is such trouble. So broke. And why? Because they kept interest rates at zero for too low for too long, and now everybody's paying for it. But they can't even get oil up. That's right. They're not bigger than the market. When you have in China, they're a big consumer of oil, and they're not consuming because their economy is in real trouble. And when their economy is in trouble, our economy is in trouble. In fact, you want to see the layoffs that are going on over there in China. And that's another thing. What's interesting, when Jared came out, Bernstein is bragging about, well, look how strong the consumer is. Black Friday, they spent 42% more than they did last year. Wait a minute. But at the same time that he was talking about that, remember what was happening? The employment was dropping for the first time since June of 2020. So there's Jared Bernstein going, wow, look at this. Consumers are so strong. They're spending all this money. They got all kinds of savings. Wow. No, it wasn't true because we got employment dropping for the first time since June 2020. And companies have started laying off workers going into the holidays. We haven't seen that for 3.5 years, but nobody's talking about this crap. They don't want you to know about it. Keep buying Apple, Microsoft. Unbelievable. And talking about it, as I said, the NASDAQ 100 stocks, 29%, okay? These 7 stocks make up 29% of the S&P 500. 46% make up 40%. These 7 stocks, I can't even say it. These 7 stocks make up 46% of the NASDAQ 100. Are you nuts? What's going on? But I'll tell you what's happening. Something's different this time. Because this time what we're seeing, it feels different this time. I've been through a lot of crashes. And this one feels different. It feels like the moon, the sun, the stars are all lining up perfectly for one of the biggest crashes ever. Biggest crashes ever. And as we go into this market, and take a look at this here, over here, I'll show you. Remember what I told you. Here was the 2008, this is my old, I drew this for you. 2008, we had that big rally, remember? The S&P went up 600%, and the NASDAQ went up 200%. And how did it go up that much to January 2022 from 2008? Because of QE, because they kept printing money and buying treasuries and keeping interest rates down, and a 10-year treasury yield was at 1.5%. And the 3-month treasury was at 1/10 of 1%. And as long as they could keep that 10-year treasury yield down below 1.6, 1.5, you could rally the market. But as they got towards 2022, remember, all the problems were hitting us. Biden turned around, and what did he do? He destroyed our energy independence. What else did he do? He put it on 4 programs: the American COVID plan, the Inflation Resolution, the Omnibus Bill, the Green Energy Bill. He put all these things out, costing a fortune to stimulate an economy that didn't need stimulating because we were at a GDP of 6.5%. He overstimulated it. So they had to tamp that inflation down that he was creating, and those 10-year treasury yields went up to what? From 1.5% to 4%. That's why the market collapsed. So it brings us back to that October 2022. So then they try to run it back up again. This is nothing. They keep saying this wonderful rally we're having. We're not having a rally. It's been since January 2022. We're going to 2024. We still haven't broken above that high. So in October 2022, after the market collapsed, they started to run the market up using the tech stocks trying to run it back up to July 2021, but they had a problem. How the hell were they running tech stocks up when the yields were still at 4% on the 10-year Treasury? How were they doing it? Well, because they were supporting those stocks. There was a big pool of money they were putting together and telling the 5 biggest banks, hey, buy Apple, buy Microsoft. We got to push the market up, push these stocks up. Well, see, these stocks don't work when you have yields of 4%. They work at 1.5%. And on the way up, what happened? March 2023, the banks collapsed. The banks collapsed. First Republic, Signature, Silicon Valley Bank, they all collapsed. Unrealized losses of what, 50 billion. Now we got 180 other regional banks with unrealized losses of 650 billion, and they're holding them up. They're scotch taping them up there. And there's not going to be a crash. So in March 2023, because they kept raising rates to fight this inflation, Powell, he never thought to sit down with one of the bankers and say, how far can I raise rates before I hurt you? So here you got the bankers taking their cash, buying treasuries and buying mortgage-backed securities, and they're sitting back getting 2.5%, 3%. And this guy, Powell, is running mortgages up to 4%. And they start losing money, and that's why those banks went down. The only thing that saved the 180 banks from not crashing is they put in the bank term funding program, put about $12, $13 trillion, so that these banks, the 180 banks, when people go to their bank and say, hey, I want to get my money out of here. I want to take my money out because I'm going to go and buy a 3-month treasury. Why do I want to keep it in your bank? I can go get 5% in a 3-month treasury. Well, remember, when they went to the other 3 banks, they had no money. They were losing money. And they finally came in and saved all the depositors that we have right now. Think about this. 180 banks out there. They're being masked. Okay, trying to hide 650 billion from us in losses, and they haven't even start hitting their commercial loans that are going under. And you're saying there's not going to be a crash? This is what they're telling us? Look at the commercial loans they have yet to hit. They just started to sprinkle in. So what they've been doing is they keep pushing up the same tech stocks in spite of the 4%. It's all fake. It's not working. It's not working. So, as I said, everything you could think that's wrong is wrong. And the breath is so bad. I mean, there's no good news. But nobody wants to listen to that. All they want to know is, hey, is Microsoft going up? Is Apple going up? Meta going up? I'm buying. Oh, you're going to get screwed big time. So here we are. Let's wrap this up. Here we are. Okay, they pushed up the market and it didn't hold, and it dropped right back down again because interest rates were at 4%, 10-year Treasury yields at 4%. Remember, the whole rally from 2008 to 2022 was based on 10-year yields at 1.5%. They've been artificially pushing up those same tech stocks with a 4%, and the only way they've been able to do that is they keep printing money, and Powell forcing the 5 biggest banks to go in and buy these tech stocks. That's what's going on. And here you are. So now we're in our last rally. And guess what's happened? Gold. I predicted this too. I said, start buying gold. Start buying the miners. And all of a sudden, the miners started to take off. Look at this. They started to take off, and nobody's buying them. This is insane. This is, if I put in, for example, my GDX, just to give you an example here, we had a beautiful day on all these golds, GDX, GLD. Look, here's my color-coded chart, started to turn green. Look at that. This is just GDX. And then we had gold and GLD. We had, look at this. We had AU hasn't turned green yet, but look how she's rallying. Okay, see it? We had this big rally, and she'll turn green. This is my color-coded chart. It follows the footprint of money. And my GDX just starting to turn green. Look how gold's going up. Miners, GLD. Okay, look at this. We bought this perfectly right here. and nobody's buying these. And gold. Know what they keep buying? They keep buying Apple, and they keep buying Nvidia, and they keep buying stocks that they're 30 to 57% above their historic PE ratio, but nobody cares. So let's continue to follow this market. Don't fight the tape. Don't fight the tape. And as we get into the first and second quarter, and this market starts to crater, make sure you're in gold mining stocks, because gold is going to keep going up. Believe me, it's the only thing that's going to be going up. People have no idea how bad this market is, because they continue to lie to us, just like this guy, Jared Bernstein, came out and said, "Isn't this wonderful? Look at this. We increased our sales on Black Friday over 42% of last year." But he didn't tell the rest of the story. But see, I'm telling you the truth. So look, we're going to get our crash. There is no question about it. When you look at this chart right here, I want you, before I leave, I want you to just think of one thing. When you look at this chart, ask yourself, how is it that the market rallied? The NASDAQ 100 went up 1,200%. The S&P went up 600%. And the reason it went up because the 10-year Treasury is 1/10 of 1%, and the 10-year Treasury was 1.5%, and the 3-month Treasury 1/10 of 1%. But as soon as they took that 10-year Treasury and got above 1.5% towards 4%, boom, it failed. And each one of these failed, went up again, failed. Look at this, failed. And everybody says we're in this big rally. What rally? Everything's failing. Oh, this one we're in now, this is the one that's going to work here. Are you nuts? All right. So please I'd love it if you would just hit subscribe and like. That would really help me a lot. And also click the link in my bio. You can check out my membership, free membership for 10 days, where you can become a member free for 10 days, and my stocks and so forth. Look, we're here to tell you the truth. I was the only one that I know of that was predicting this rally would occur before the final crash. Just remember what happened with Enron, okay? Remember what happened in 2022 when that market crashed. We're heading the same way, but things are worse, okay? Things are worse. No one has ever seen a banking crash like this. Combined, the tech stocks are going to blow up. Just the combination between China blowing up and the tech stocks blowing up are going to take this market down 50, 60%. But everybody's just buying Apple and going on with their lives. So please, check it out. Again, for my membership that's free for 10 days, just click the link in my bio for all the information. Thank you for listening. See you on the charts.